Hey there, welcome to the channel. I'm Kitty Howard, and today we're going to cover how to set a trailing stop loss on Binance. This is coming to you from Beginner's Guide to Cryptocurrency and Investing, where I give straightforward explanations and step-by-step investment plan. This topic today is not covered in the beginner's book because this topic is much more advanced. We're looking at prioritizing capital protection before making profits. This is all about risk management because we want to stay in the game longer. So, like all my videos, this is not investment advice. And what we're going to cover today is learning what a trailing stop loss is, how to use it, how to set one up, and of course, I'm going to provide you with examples. Let's dive in. All right, crypto trading is not a game of chance, though some approach it as such. The crypto market is infamous for its unpredictable volatility. To benefit from this volatility now and over time, you must ensure that you stay in the game long enough. That is where capital protection comes in. Your capital is what you start with, and the goal is to keep it and to grow it. Now, we're here to protect your downside. A trailing stop loss is set up as a percentage of the original sale price rather than at a price point. So both a trailing stop loss and traditional stop loss can help protect your capital, but a trailing stop loss will protect your profits. If the price action reverses after a run up, profits will still be locked in, protecting the investor. Or if the price reverses soon after purchase, the majority of the capital investment is also protected. In a volatile market, you just never know when slippage might occur. This means that you should always protect your profits. Take profit works similar to the stop loss, only that in this case, your trade closes when your profit reaches a particular amount or when the price reaches a specified level. Trailing stop losses are used to protect losses of accumulated profits. Trailing stop orders are often attached to some pips or percentage below the prevailing market price for a long position and above the market price in a short position. This means that when the price fluctuates, the trailing stop does change along with it. When the trend changes, your position will be closed when the market price reaches the trailing stop level. While some might argue that this limits your upside, it is especially invaluable in a volatile market. For example, if you have a short position and the market is in a steady bearish trend, it means that your trade is accruing profits. But any sudden change in the market sentiment may cause the trend to change without notice. With a trailing stop, the profits accumulated won't be lost. Typically, when setting your stop loss and taking profit levels, always consider the current market volatility and the support and resistance levels. Technical indicators like average true range are of great use here. This will also depend on the holding period of your trade. As a rule, the volatility is higher with a holding period of several days than within a single day. This means for you that the longer the holding period, the more generous the stop loss and take profit must be set at. Now, where can we actually use a trailing stop loss? Binance, Bittrex, KuCoin are all offering a trailing stop loss in their options. If you happen to be in Canada, Binance and NDAX are both available. Binance, I think, is still not available for Ontario residents, but maybe in time that changes. All right, how do I use a trailing stop loss on Binance? Well, it's a little bit tricky because it's not available in your spot trading account. You must go into futures, and if you're new to this, it's a different section of the platform. All right, we'll dive in here and look at some examples. A normal stop loss is set at a fixed price. So say, for example, you're buying some Bitcoin at $30,000 and you set a stop loss at $29,400. This is set at the specific dollar amount. Now it happens to be 2% lower, but it is the price that is set and not the percentage. A trailing stop loss is set at the percentage of the purchase price. So again, we're buying some Bitcoin at the $30,000 price mark, and we set a stop loss at 2% of that price. The percentage is set, not the price. As the asset rises in price, the trailing stop loss will follow it up. If Bitcoin goes all the way up to $40,000, then retraces, the investor gets to keep $39,200. It stops out at that 2% mark, not sliding all the way back down to the $29,400 mark. The investor would be able to keep an additional $9,800 in this example had they purchased an entire Bitcoin. Now, this is 33.3% more profit than the traditional stop loss would have protected. That's really important. And that 33.3% increase would apply to any value, whether you bought an entire Bitcoin at a full $30,000 or $100 worth of Bitcoin at the same price point. All right, let's look at how it breaks down in a different way. So let's say on the left, we'll follow the regular stop loss, which is set at the price. We buy $100 worth of Bitcoin. We set a stop loss at $90. If it's triggered, we've lost 10% of our initial capital investment. In the example of the trailing stop loss on the right, we buy $100 worth of Bitcoin. We set a trailing stop loss at 2%. And if it triggers right off the hop, you would be protected at $98, only losing that 2%, not 10%. Now, if the price were to increase to $110 and then reverted, you'd be able to keep an additional $7.80. If it went up to $120, it wouldn't stop out until $117.60. That is far more profit protection than having it slide all the way back down to $90. The trailing stop loss will always be 2% below the price. All right, now how do I use the trailing stop loss on Binance specifically? We're going to dive into the platform and go frame by frame. As I mentioned, we cannot access a trailing stop loss option in our spot trading account. We must go into Binance Futures. To find Binance Futures, you can see at the top of the screen, we have derivatives, and that is a drop-down menu that opens up. And 1, 2, 3 down, you see USD M Futures. You would click that to get into the Futures section. Now here we can see why am I frozen? I'm frozen. Sorry, guys. Okay, it's still recording. My screen froze up a little bit. All right, so here now we can see that we're in Binance Futures in the top left corner. If you go all the way to the right where it's circling, you can see where there is a stop limit order drop-down menu. And if you look on the chart, you can see a good example from May 16th, 2022 of why it's necessary to set these. Price action goes up and it goes down. And in this case, it dropped over these hours. The whole market's been in a bear trend since November, all-time highs in 2021. And of course, in 2022, we're heading into a recession that's affecting a lot of things globally, not only the crypto market. So let's look at this a little closer. Here we've got the big bubble. We can see that there's been some sideways movement, and then there was a run up in green in the middle of the screen just before we head into the bubble. And then it comes down again, a little bit more sideways action before another big drop down. Now, my eyes aren't good enough right now to see how much percentage that drop was, but if it was more than 2%, certainly having a trailing stop loss active on your trade would protect you from losing far more. And if you'd made any profits on that green run up in the center of the screen, they would have been protected and you would have gotten to keep more than had you not used it. Moving on. Now, how do we actually set up the stop loss? Over on the right, you can see where the stop loss drop or the stop limit drop down is, and the center is how it opens up. We're going to go into the next screen to look at it a little bit more closely. And you can see it there on the screen. If you drop down the menu, the third one down offers up trailing stop loss. We would click on that to get it set up. I'm going to go over the entire frame that opens up for you in the next slide. Let's do that now. Here's what it looks like. All right, so we've chosen trailing stop loss, which turns orange or yellow when you're in that screen. Below that, we can see that what's available in this account is $100 in USD Tether. And then to the right is a reversed arrow, which is where you would fund the account. And beside that is a icon that opens up the futures calculator so you could play around and see what the numbers are going to look like. Below that is callback. That's where you would insert the percentage of your trailing stop loss. In the previous examples, we've been using 2%, and you can click easily 1% or 2% as you set it up. Below that, we see activation price. That can be left blank or filled in. We'll get into that more later. And the size of the order that you would be selling. So if we were buying a whole $100 in Bitcoin, we could sell out the entire $100 if the trailing stop loss were triggered to protect any profits and definitely protect our downside. Now, before we can set a trailing stop loss, we have to actually have something that we are protecting. So we have to be able to first buy Bitcoin or whichever asset you choose within while inside your futures account. And this is how we would do it. We would click on market, that would then highlight in orange, and then we would buy a Bitcoin, whatever our order is going to be. In this example on the screen, I've chosen 25% of the account. So I've got $100 available. If I click 25%, that would purchase $25 worth of Bitcoin. And then I would go ahead and click buy long, and that would put some Bitcoin in my futures account. Once that purchase is made, it will show up, the order will show up at the bottom of the screen below the chart. Now that we do have Bitcoin, we can go ahead and set our trailing stop loss. So again, we click on trailing stop loss from that drop-down menu. It'll highlight in orange. We can set our callback, usually 1 or 2%. And let's pause it there. Once you've set up your 1 or 2%, below that is the activation price. Now you can go ahead and leave that blank. And once it's established, your 2% will follow your purchase price up or down and trigger once that percentage is met. If you think that Bitcoin's going to run up to $40,000 or $35,000 or above, you can set an activation price so any volatility before it reaches $35,000 is ignored. And that can keep you in your position longer if there's some sideways action that's happening in the current market. If you do choose to set an activation price, it must be higher than the purchase price. If you try to set it lower than the purchase price, your sell button or shorting button down there in red will not be clickable. It'll be gray and you won't be able to click on that. So again, it needs to be a higher price. So as the example I gave you a second ago, maybe at $33,000 or $35,000 or something like that. So you get some profits on your books before the 2% triggers an activation. All right, so let's recap that. We go into futures, we buy some Bitcoin, it shows up at the bottom of the screen, and then you choose trailing stop loss to set up your protection of that capital. You set an activation price or not, and then you go ahead and with your trailing stop loss and you click sell short so that when it closes, it'll close out your position once the order is activated to secure profits and or protect you from excessive losses. All right, when should you use a trailing stop loss? Let's jump into that. When the price action is moving rapidly or when it's gearing up to move rapidly, when you want to lock in profits in that volatile environment, and when you can't predict what's going to happen next. All these are great examples of why and when you would want to use a trailing stop loss. Now, when would you not want to use a trailing stop loss? When the price action is in ranges, or when it is ranging, you would want to maybe avoid that. The order could close out your position before a big run up, and you could miss out on some profits. But again, the priority is to protect your downside, to protect your initial capital. You can always reestablish a new position and get back in if you do get stopped out. So some other options in the situation are getting into grid trading bots. That's included in my masterclass course, or opening up a larger percentage, or setting your activation price. If you do want to set up a trading bot, you would find that in the trading strategy section. People do lose money with bots as well. They are not infallible, and there's certain settings that must be well set and respected and understood. It's a whole different section. Yeah, we'll leave that there. All right, I want to thank you for watching. If you enjoyed this video and found value in it, give it a thumbs up and subscribe to the channel. It's exciting to have you here watching and learning together with me. And again, thanks for coming and checking out Beginner's Guide to Cryptocurrency and Investing. And if you're interested in getting a copy of the book for yourself or for someone that you know, I'll make sure there's a link down below. Thanks again.